Welcome to Snapfax. I'm your host, Taylor Fraser, Manager of Corporate Affairs here at Canada Beef. The quarterly Snapfax is provided in partnership with Canfax Research Services. To find out more about them, you can visit their website at canfax.ca. The intention is to provide market trends that we think are worth watching and inspire conversation and further information sharing. You'll find Snapfax segments within our Canadian Beef Centre of Excellence website, which champions market intelligence and innovation here at Canada Beef. Today we want to talk about trim pricing, how it affects the entire beef cutout, and eventually may lead to movement at retail for beef pricing to consumers. To start with, Canadian cattle inventories on January 1st were up 0.3% at 12 million head, the first increase since January 2013. The slight increase is driven by larger heifer retention and calf numbers, while beef cow inventories remained steady and steer and feeder heifers were down in slaughter. Beef cow inventories were steady last year with 3.83 million head. This is the very first year without a decline in the beef cow herd since 2006. It was a good start to the year for domestic beef production, which was also up 3% year to date from January to February at 330 million pounds and projected to keep a small increase over last year. The Canadian cutout is derived from a formula that estimates the value of the carcass using a weighted average from the carcass 6 primals. These primals are broken down into the percentage weight they contribute to the entire carcass value. The AAA cutout averaged $290 per hundredweight in February, down 4% from last year, and the AA cutout averaged $285 per hundredweight, down 5% from last year. So this shows that wholesale beef prices are trending downward and have dropped below levels seen this time a year ago. 85% trim used primarily for grind and burger production saw a significant correction last fall with ample supplies in North America. Carcass weights reached record highs and imports from Australia and New Zealand remain strong. Beef prices have stabilized this spring as carcass weights have started to come down. High demand for trim can be seen on a global scale and in the domestic market. If robust expansion happens in Canada in 2016, domestic non-fed production could tighten. In addition, reduced cattle slaughter in Australia is expected to limit exports in North America, further tightening supply of valued trim. Canadian importers appear to try and secure Australian and South American imports aggressively in the first 2 months of this year. Australia trades on tariff rate quota, so as of March 5th, 34% of the tariff rate quota available for Australian beef had already been filled. The least part of the reason being, with at least part of the reason being an increase in the inventories accumulated in bonded warehouses at the end of 2015. To add to that, the tariff rate quota for most favored nations have been used mainly by Uruguay. In total, 37% of the annual trade rate quotas have been used up in the first 2 months of this year. Going forward, smaller non-NAFTA imports within the second half of the year are expected to support domestic lean trim prices. Always of interest is how all of this affects retail beef prices. Stats Canada reported retail beef prices in February were up 8% from last year and a full 32% from the 5-year average. That said, as wholesale prices come down, margins are improving. This potentially provides an opportunity for more featuring amongst retailers and a chance for beef to regain some of their market share. We invite you to connect with us at Canada Beef on how we can work together to build a Canadian beef story. I hope you found this information useful, and we'll see you next time.